All right, Tony, thank you. Some good news for borrowers. The Federal Reserve has voted to cut interest rates.
12 News consumer reporter Sarah Gurnelli has more details on how this could be good news for some who are looking to borrow money. Sarah?
The Federal Reserve has decided to cut its key rate by 0.5 percentage point. This is the first rate cut in more than 4 years. This comes as the Fed has become more concerned about the job market. Lowering rates could help with hiring and keep unemployment down. Federal Reserve Chairman Jerome Powell with a major announcement on Wednesday.
Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by 0.5 percentage point.
This comes as the Federal Reserve has been fighting inflation for years. Inflation peaked in 2022 at 9.1%. The central bank has raised interest rates 11 times over about 17 months. Nathan Bouvet, a financial expert, says the Federal Reserve cut interest rates because they feel like inflation is getting under control, while there is concern about the job market.
I think the big reason they lowered rates was because inflation has cooled. Prices are still higher today than they were 3 or 4 years ago, but they're pretty much in line of where they were 1 year ago.
The federal rate set short-term borrowing costs for banks while also impacting mortgages, auto loans, and credit cards. Bouvet says the rate change will affect people differently depending on their financial goals.
So if it's a short-term loan like a credit card, the rate should go down pretty quickly from here. But long-term loans like the 30-year mortgage, those have already started to go down in anticipation of this. Long-term rates take a long time to unravel.
He says the popularity of CDs will also eventually go down. He adds this will have an impact on those who have money in high-yield savings accounts, which typically gain more interest than a traditional savings account.
Those are going to get hit quick. Those will feel the impact really quickly in the next month or two. Those rates should go down from here.
As for the stock market, he says the Fed lowering rates can be a good thing.
Stocks always like it when rates go down, so stock market should do good, but the stock market anticipates these things. So it's not likely that the rates get cut today and the market takes off. The market has been doing well the last 12 months in anticipation of rates coming down.
Financial experts expect the Fed to cut rates again in the coming months. Sarah Gurnelli, 12 News.